Hey guys, Doug the Retirement Guy. Got a question for you. Review of the Roundhill MAGX ETF. Is it good for a retirement fund or is it good for more income? And this actually came from one of our viewers asking us to do a review onto it. So we'll take a look at it. When I first opened it up and saw that they have a return yield of 86.07%, I was blown away by this one and it made me want to go even deeper into it. So this is a fund out of Roundhill, and it's a daily 2x long Magnificent 7 ETF. So you always question, what does all that mean? Well, a 2 times long Magnificent 7, it seeks daily leverage investment results. So what they're trying to do is get 2 times the performance of the Roundhill Magnificent 7 ETF. And they're doing it in different ways by aggressively trading in and out of the fund and trying to get 2 times the daily leverage that the regular fund has. I've seen this before. You've seen this in a lot of different funds. So it's nothing new to me, but it is a risky fund to be in. It's a risky way of doing it, but it gives great rewards. The return rate, as they said, 86.07. And I'm shocked at this one. They said the 30-day SEC yield of 2.62. Their top holdings, well, of course, it's going to be in the Roundhill Magnificent 7 swap. Now, what's in the Magnificent 7 is Apple, Google, Microsoft, Amazon, Meta, Tesla, Nvidia. There's a lot of the 7 hottest tech stocks are out there. Is they are trading back and forth across the board. So this fund is actually trading the Roundhill Magnificent 7 swap and trying to, you can see the weight of it, they're 200%. So they're constantly in and out, in and out, in and out, in and out of the fund. So why would you want MAGX? Well, of course, everyone's going to tell you, I want that 86% return. Um, and that's got to be the big point to it, because when you look into this thing deeper, the 86% return basically comes from both income of dividends, interest, and capital gains. This one primarily comes from the capital gains of its trading aggressiveness. There is a lot of volatility and there is a high risk of this because they're trying to do something 2 times what another one of their funds is actually doing. Now, I did look at this, and when it said the 2.64% over 30 days, normally that will show us a good potential payout coming from it. But the 30-day yield is calculation reflects dividends and interest earned during the period after deductions of funds expenses. So it really, I'm going to tell you this, is it's how they want to manipulate that 2.64. It's not just 30 days, but it's when the fund deducts the fund's expenses, and they normally do that at the end, not during the year. They offer a yearly dividend. Well, right off the bat, I tell you this is for retirement, that's a no. In retirement, we want weekly, monthly, and minimum. There's certain stocks that we will fall down to go to quarterly, but we'd rather stay in the monthly development, especially with the retirement and the retirement income that we look at on this channel. So there is no regular cash flow of this. The income focused investor, the funds do not apply a cash flow. So again, the question that was asked, is this good for a retirement account? If you're looking for cash flow, it's a no. I can end the video right here and say we're done because it's not for regular cash flow. But let's go deeper into it and find out, what do we really get out of this fund? So we look at this as the first month that we looked at it was down 0.22%. Doesn't shock me because the past month of November of 25, stock market has been just pretty flat. It's up and then down, up and then down, and a big drop and comes back up. So it's really nothing spectacular. You look at 6 months out, we're at 52.52%. Well, now it's got me thinking this is probably a fairly decent fund for returns. The year to date doesn't shock me because we're working off of still only 1 month of the year. But when you look at 12 months, 1 year out, they're at 76.41%, and since inception, they're 86.58%. So what we had to do was we threw this into our calculator. If we invested $10,000 12 months ago, where would we be sitting? And back in March, they were $37.68 a share. So we would buy 265 shares. Since there's no dividends really to worry about, It's all about the value of the fund and how well the stock is doing. And we're able to go all the way to February 11th of this year, excuse me, and we come up with a 44.13% growth, or $4,413.44. The dividend, they pay one dividend in December every year, and that came into $113.12, or 1.13%. So again, dividends are out of this thing. This is about putting money into a fund and trying to grow your fund as quickly as possible. So at the end of the year, your fund would be worth $14,526.56, or a gain of $4,526.56 for a 45.27% return. So again, if you're looking for something to grow a dollar amount, I can see this fund being very strong for you. You know, if it was me personally, I would sell off some of my shares, take the $4,000 and roll it into something else that's going to pay a fairly decent dividend. The only other thing that you could do with this fund is basically get to a certain level, sell off, and keep your 10,000 rolling. But basically get all your money back, which it looks like in about 3 years you'd have all your funds back, and you know you're working off the bank's money. But it's not generating income; it's just trying to generate growth. So when we look at this thing over timeline, it's steady climbing. Like I said, you started 37, you're all the way up to over $50 now. Your average price is 46.68. That's going to continue to climb. The chart easily shows that it holds the price value over periods of time. There's only the two little bumps that if you want to even call it a bump, that they've leveled off at. Morningstar does not give this a rating. They do not rate these types of funds. So our summary overall, and as a stock return over the past 12 months, 44%. Give it a big thumbs up. Dividend return, 1.13. There's no regular cash flow. I give that a thumbs down. And stock total return, 45.27, including your dividends. Again, that's a thumbs up. You have little dividend from this fund, so there's really no cash flow, so it does not belong in a retirement investment account. So is MAGX good for a retirement account? My answer to you is going to be no. Morningstar has no rating for it. Your dividend is not strong. It's only 1.3, and it's only paid once a year. Your NAV return rate is great, 44.13%. And your total return, including your dividend, is 45.27%. We rate this as a moderate buy only for the reason is if you're trying to grow your fund to get more value in your fund, but you're not doing anything for your retirement. If you were sitting here and saying I have $200,000 and I really need to be up to $300,000, this would be a fund possibly to put money into. That's not what the channel looks at, and it's not what we do. We basically take what you have, we invest your money to make sure that it's working strongly for you so that you can live off your money, live off your dividends, and enjoy the retirement life. But this is just going to make your numbers look big. You're going to have to sell the stock off and to regain any of the gain. And then you got tax issues and problems across the board when you're trying to do the capital gains in short term, or I don't think you'd have this on a long-term basis. So again, guys, this is back to you. It's not for a retirement account. I know our viewer asked for it, but again, we're just telling you the truth of it's not for a retirement account. Hey, I'm Doug, the retirement guy, and I'll tell you this. If you like what you're seeing, press that thumbs up button. Give us a like onto it. If you like what you're seeing, hit that subscribe. Don't miss any of the videos and the channels that we're putting out there. And if you have any comments at all, put them down below. We'd love to hear from you. We're getting a lot of reviews. We're getting a lot of comments from people, and we're doing more videos to give them what they're looking for. Everything helps the channel. Thank you, and we'll see you next time.